about the company and myself. I'm Gareth Edmonds. I'm the External Affairs Director for Sirius Minerals. So I've been with the company and involved in the York Potash project before it was acquired by Sirius Minerals. But what you can see from this slide is a team of management that we've built up, which is there to deliver the project. It's not a typical resource project or some of the other AIM-listed resource stocks you might see, which are built to get it to a certain stage and sell it on. This is a project that we're intending very much to deliver ourselves, and we have the capabilities in-house to do that, right the way down from board and management to our operational teams as well. Just a few people of note, obviously Chris Fraser is the Managing Director of Sirius Minerals and the founder of the York Potash project. He's a former investment banker who's heavily involved in the financing of the Fortescue Metals project in Australia. And of other note, and you can go through the details and separately on our website if there's interest, is Graham Clark, who was the former Managing Director at Cleveland Potash, so the only other operation that mines polyhalite currently. Just a summary of our business proposition, really. We're a disruptive global fertiliser business. That's our intention, to be a very disruptive force in the market. And when we talk about disruptive, it's about the opportunity to bring a very large-scale deposit into the market in volumes and a method that's not been done before. So we have a proven and growing demand for the product itself. The nutrients that are in polyhalite are well understood by farmers, and it's just that they're coming in a different form wrapped in the polyhalite product. In terms of the physical infrastructure, it's a very simple model. So we've got a simple set of shafts, tunnels, processing plant, nothing that hasn't been done before. And therefore a simple business model. Dig and deliver, get the product to market as cheaply and as efficiently as possible. We also have a advanced development process, and for those of you who've been following the story over the last 4 years, you'll know that we've been involved in a lot of approvals work, but at the same time we've been doing a lot of engineering work and developing the project in that sense. And it's a project that really does have compelling economics, and we'll come back to that later. And lastly, we have multiple downstream opportunities and diversification opportunities. And just at the bottom of this slide, the other thing you'll see is that we've come a long way already. So we've spent a lot of time going through the approvals process. We've also defined the resource, established our land positions, and now we're on the cusp of financing and constructing the project. This is the project area. So the red line is the area of interest within which we hold mineral rights. The dark green area, which you can, not sure how the laser pointer works, but you'll have to see it in the centre of the screen. That's our resource, where we've defined a resource of 2.6 billion tonnes from just 7% of the project area.
Moving forward, do you want the highlighter?
Yeah.
The highlighter is that one there.
Great. There's a bit of feedback as well. Is that right? There's a bit of feedback as well. Don't worry, it's fine. So the other thing to note from this slide is that we have a very close proximity to the port. So our mine is just south of Whitby, and then we've got a tunnel system which will take the product in a conveyor belt to Teesside, and that's just 36.5 kilometres. So that gives us a competitive advantage over other projects around the world. I'll come to that in a moment. The development plan is a simple cartoon which talks you through how we're going to do what we're going to do. On the left of the slide, you've got two deep shafts going back down to 1,500 metres, accessing two seams of polyhalite. We've got a shelf seam and a basinal seam. At 360 metres below surface, there's a tunnel system, effectively a mining roadway which will link our mine with Teesside. In that mine, we'll have a series of conveyor belts, and that again gives us an advantage. If you're in Canada or in other areas of the world, you have to multi-handle your product, you have to put it on rail freight. This has the effect of putting our product at the port, which gives us a competitive advantage. And then the port is a simple granulation process and shipping from Teesside to our customers around the world. Polyhalite itself is a unique form of 4 nutrients that all plants need to grow. So you've got potassium, sulfur, magnesium and calcium. And those are 4 of the 6 macronutrients that all plants need. They all need them in different amounts and different times in their growing cycles. It will depend on how much they need according to the soil types and what crop you're growing, but all plants need those 6 macronutrients. What you've also got in polyhalite is a small but valuable package of micronutrients as well. One of the key things that differentiates polyhalite from competitor products, the world trades potash typically in MOP, potassium chloride. Obviously our product does not have chloride, which is a competitive advantage, but it does have these three other nutrients which plants need as well, which is sulfur, magnesium and calcium. Just a quick indication of the simplicity of the model we're proposing. If you look on the right-hand side for MOP project, Cleveland Potash in the UK and all the major potash companies that you would commonly know use a variance of that process. So for every 4 or 3 tons of rock they mine, they produce 1 ton of product. With the deposit we have, the quality and the scale, particularly the quality, we're mining 1 ton of ore to deliver 1 ton of product. It's a simple process of crushing it to a powder and then regranulating it in our facility. As you can see, that gives us a great advantage over our competitors, and particularly at the bottom you can see the distance to port, whereas others have to struggle with rail freight or other challenges. We've got a conveyor belt which links us from mine straight to the port. This just touches on some of the crop studies we've done over the last 3 and 4 years about how polyhalite compares to other products. And if you're interested in this, there's a huge amount of information and webcasts on our website covering each of these crops. What we're showing here is basically the scale of the testing we've done, and the testing we've done is not to prove that polyhalite is a wonder product. It's just to give confidence to the clients that we're selling to that it works in the conditions we say it's going to be working in, and also just to demonstrate the difference of the product against other competitors. So there's been a vast scale agronomy program that we've undertaken and will continue to do. It includes 17 greenhouse trials, 13 different crops, 83 field trials in 25 different crops in 7 countries, and 14 commercial scale partner trials. So all of that is designed on each crop to show where polyhalite can fit into fertilizer blends to give our customers, in turn their customers, a competitive advantage. And what you're seeing here is a comparison between a traditional potash product used in a NPK fertilizer blend against an NPK fertilizer blend with polyhalite used. Now, why you're seeing such dramatic increase in yields is primarily because obviously you're getting 3 extra nutrients that you wouldn't get in the traditional blends, because you've got that sulfur, magnesium and calcium, and you've also got an absence of chloride as well, which helps. This has led to basically great progress that we've made with our sales. So in the fertilizer industry, it's not normal to sign contracts this far in advance, particularly when we're at least 5 years away from commercial production. So what you can see here is customers saying to us, we want to be part of the project, we want to secure supplies. Now we're offering, obviously, this far out a discount against the true nutrient value. You'd have to do that anyway as part of an entry strategy into the market. But these are people signing up to long-term, meaningful contracts that will both help underpin our financing and the growth of our business as we move forward. And again, there's more detail on our website, but you can see that the spread of the product will be going to North America, South America, China, Europe. So all around the world there's a demand for this product. We touched on this at the beginning of the slide a bit, but we're not just starting out from scratch. Those of you who may have followed the project will realise that we've been in a very long and extended planning approvals process, which thankfully we've moved through now. We have all the key approvals we need to progress the project. So that includes the approval for the mine and mineral transport system from 2 separate authorities, the approval for the materials handling facility on Teesside, and various ancillary applications around park and ride structures that we need to support both the construction and the operation of the business. We have 1 approval outstanding, which is for the harbour facilities in Teesside. That's a process which goes to a national process through the planning inspectorate, and that at the moment is due for determination no later than summer next year. However, it's important to note that that is not on our critical path in terms of advancing the project. We're seeing that as a process that's working well and not something that's an impediment to us financing and constructing. Just touching again on some of the, obviously we've had success with the planning applications and for building the market and showing tangible interest from customers, firm take-or-pay contracts. And obviously before that we had a big program for securing mineral rights within the area of interest that I explained earlier, and also about securing the land positions we need. And in parallel to that work, there's been obviously a huge amount of engineering work going on. We're currently in the phase of finalising the definitive feasibility study, which gives us our revised capital and operating costs and schedule. But as part of that work, there's been a huge amount of engineering going on, and we've had contractors tendering for the work in parallel as well. So when the DFS comes out, it'll be based on live numbers and value engineering that's been going on to underpin that work. So the next phase for us, as many of you will know, is a financing which we've talked about raising the initial tranches in early 2016. But you can see on the right of the slide here, the two chunks of work really, 2016 to 2020 is the construction phase, and the construction is really broken into two chunks, if you like. There's the excavations for excavating the tunnels and the shafts, and then the second stage is really the fit out, building the harbour, building the granulation facilities on Teesside. So it's a very clear distinction between digging the holes and moving the earth and then fitting out the facilities. And through our approvals work, we've talked about a construction timescale of around about 5 years. And that leads us into production. So in year 4, we are into polyhalite at the bottom of the shafts. So we have some initial cash flows and product coming out of the shafts. And then in year 6, we're into meaningful commercial production, and with the ability to ramp up production levels to 10 million tonnes very quickly indeed. And we see beyond 10 million tonnes the ability to optimise the mine itself to generate potentially up to 20 million tonnes a year, which is a substantial output for a fertiliser project of this nature. The financing strategy is obviously something that we'll have a big focus on in the early part of next year. And again, there's more details of this on our website, but this is just an indicative structure for how we intend to meet the challenge of raising this money. And I think the best way to summarise this is all of the financing structures we put in place, which will be a mixture of project debt, equity, senior debt, operating leases. There's a whole range of mechanisms that the team are looking at. But those are both, or all, stepping stones to getting to the first day of production. And at the first day of production, we believe we've got a business that will have an NPV of over $10 billion conservatively, with the ability to go a lot higher. So we're viewing the financing very much as though the numbers are big for greenfield projects, and we've never shied away from that. But we're seeing those as stepping stones to getting to that point and the refinancing for the long-term capital structure. And from there, obviously, you can start to pay down debt and pay out dividends. And we see this as a business that, on the other side of this construction process, is one that can churn out a lot of cash on an annual basis. And we're targeting, as it says here, $1 billion US of EBITDA. Now, I guess for our investors and people interested in this project, it's about getting comfortable with the ideas of the structures we're going to use to finance the project and the mitigations we're putting in place to manage the risks during construction. And that's what we're going to present as we come through the DFS process. On the financials, we've touched a bit on this already, but we're talking about ramping up to 10 million tonnes a year very quickly, looking to a capacity of 20 million tonnes long term. And in terms of operating cost, previous studies were showing around $30 a tonne is a realistic expectation for getting the mineral out of the ground, FOB and Teesside. With studies we've done on the market itself, we think there's a very large market, far more than we can ever produce out of this mine, and a price range, according to CRU, who are market experts in potash, of between $110 and $170 a tonne. So you can see you can generate very large margins on a very efficient bulk scale. And conscious that we've only got 20 minutes and I want to allow some time for questions if there are any, this is just to touch a little bit on some of the other opportunities that we have as part of this deposit. We're building infrastructure capable of getting a lot of rock out the ground. And it's not just polyhalite we're looking at other options and downstream options. We've got access to salt within the project. We've also got access to traditional potash, MOP. Rio Tinto defined a very large project, 500 million tonnes of material 30 or 40 years ago. That sits within our area of interest. We don't have approvals to extract either of those at the moment, but we wouldn't require any substantial infrastructure changes at the mine site or on the surface or at the tunnel. It would all be done at Teesside. So we have the options to expand into different product ranges, and then polyhalite can be processed into sulfate of potash. And those of you who understand or have been following the potash markets in the last 5 years, you'll see that sulphate of potash has maintained its premium to MOP and indeed increased it substantially. So that's some of the options we're looking at. And the downstream options include setting up blending plants with some partners in country. We've also been looking at seed coating and some animal feed work in terms of looking at different industry to supply polyhalite to. So there's a whole range of options that just add value to our business that we're planning. And that comes off the back of building some substantial infrastructure that can get a lot of material out of the ground at a very cost-effective price. So I think I'm just about within my 15 minutes to allow 5 minutes for questions. So I appreciate that's a bit of a whistle-stop tour, but we'll just move to any questions that people might have.
Thanks very much. When you've got equity up there and debt, what level of equity funding is in?
I think with the financing, we're really going to have to wait for the DFS to come out because it's due to come out this quarter. So it's being finalised at the moment. And once we have that, we'll come out with a clearer strategy on the financing. Obviously, there'll be a combination of mechanisms that we use to raise the money. There have been conversations going on for a very long time, strategic partners, institutions, a whole range of options. The theory has always been, and the strategy has always been to leverage as much debt as we can. But obviously and that it lends itself very well to doing that because of the cash flows you throw out once you're in production. But obviously in a capital bill of this scale, there will be an equity portion as well. But more to follow, I think, is the best way of describing that. Is there much processing? No, it's a very simple process. So the rock was cut from the rock face. It's moved on conveyor belts down to the bottom of the shaft. It's hoisted, some sizing goes on within the mine. It's hoisted to the conveyor belt. The conveyor belt takes that to Teesside. When it gets to Teesside, it's a simple process of crushing it and then regranulating it into pellets that you'd recognise as ordinary fertiliser pellets. So it's a very simple process from a very easy dig and deliver process in mining terms, I guess. Yeah, so that's the question about the offtake and the price. Sorry, there's a lot of background noise. The offtake agreement that we signed recently was a trebling of the original contract that customer had with us, a North American customer, very substantial Fortune 500 business in the US. We haven't named them or any of our other partners to date. We've also kept the terms of the deal confidential for various commercial reasons. But we've guided the market to the fact that the CRU study looked at a price between $110 and $170, and a midpoint in that price is $140. So we've allowed the market to be guided around those levels.
You're just taking the rock out subsurface. Mm-hmm. That's leaving a gap. Does that create any kind of instability?
No, we've done quite a lot of rock testing on the mineral. There's been another potash mine in the area for the last 40 years, Cleveland Potash. It's about 15 miles north of Whitby. They've been mining traditional potash, and they've also been mining polyhalite as well in the last 5 years. They've monitored that over the last, I think it's about the last 10 years, maybe longer, and they've not found any damaging subsidence in the area at all. What we've found from the rock testing is that we've got a very competent mineral, and we've got reports from our consultants and confidence from the guys who understand, our own mining guys, people who understand the rock, that we won't have an issue with subsidence at all. And it will be monitored on an ongoing basis anyway. Okay, thank you very much.